We've got some major news to cover in the semiconductor industry on this week's show. We are just days away from Nvidia reporting their earnings. We'll give you a preview on today's show, what to look for. What are some of the trends with the earnings estimates for Nvidia have been over just the past couple of weeks? We have multiple price targets as well, as analysts are trying to get in front of the report, which releases later this week. We'll discuss that. We had some major news cross about super microcomputer just this weekend. So we'll talk about that. We'll talk about some of the price action that we're anticipating for super microcomputer next week. Also, what does this plan that the company is reportedly going to be coming out with actually outline? And we also had earnings from Applied Materials, also Camtek, and we'll also go through all of these companies from a technical perspective. What is going on, investors? Hopefully you guys are doing well out there. It's time for our weekly semiconductor show here on Equity Empire. We kick things off like we normally do with Nvidia. Now, year to date, shares of Nvidia are up 186%. And just over the past 5 days leading into the company's earnings report this week on the 20th, shares fell by about 3%. Now, we've got Wall Street analysts kind of piling in and upping their price targets ahead of these earnings, including HSBC, which has a street high of $200 per share. Nvidia currently trading at about $142 per share. Oppenheimer bumped their price target from 150 up to 175. And then you have a flurry of other estimates coming in between about $160 and $180 per share. All of this likely means that the company is getting a clear view, or these analysts are getting a clear view of the company's revenue, which we've pointed out numerous times here on the channel. In fact, about a month ago on the newsletter, links down to in the description below for the newsletter. About a month ago, I wrote an article about Nvidia and basically said, hey, I think the shares are likely to head higher, largely based on the fact that Wall Street had a wide expectations for the company's revenue going forward. Now, in the most current quarter, which they'll report just a couple of days from now, Q3 report. Currently, Wall Street's expecting about $33 billion worth of revenue. Back about a month ago, it was just under $33 billion. But where things get interesting with Nvidia is you start to look out 2, 3, 4, 5 quarters from now, the spread between what analysts are expecting and what the company could potentially do gets wider and wider just a quarter out. And this is really what's going to drive Nvidia's share price in the coming days ahead is, look, we're all expecting the company to put a number close to 33, maybe as high as $35 billion. That's the quarter that they're just to announce. Now, if they're higher, significantly higher than $35 billion, well, easily the shares will continue to move higher. It's really that next quarter which we're wondering about with Nvidia. Current estimate on Wall Street is for $37 billion. So this is really what you need to look for. I'll point out a couple of other things that you really need to look for when Nvidia reports their earnings on the 20th, but the big number is obviously the next quarter guidance. Wall Street's expecting $37 billion. Any number around that, even $38, $39 billion, I think will be viewed by some as a disappointment. That is because the spread on Wall Street is still rather wide. The low end estimate is for 34. Certainly if Nvidia puts up that number, shares will go materially lower. But the high end estimate is for closer to $44 billion or $10 billion higher and $7 billion higher than the midpoint. If Nvidia, which I think is plausible, the company could potentially put up a revenue estimate number close to $40 billion. Well, if it does that, I think shares are going materially higher. That is because you will assume the next quarter after that, which the company won't formally give guidance for, but you can start to connect the dots as investors and analysts will likely do, is that the next quarter, Wall Street's expecting a shade over $40 billion in revenue, but some are expecting revenue to be as close to 45. It's really when you start to get into the second half of next year, when you see the revenue estimates get even wider, 37 to 52. These are massive gaps. In fact, you rarely see this in the stock market where you have 10, 15, and in some cases near $30 billion gaps. Look at Q4 of next year. $25 billion is the low end. That could be some analyst that is just completely as asleep. And you have a high-end estimate at $80 billion, which would be double the revenue that the company is expected to put up over the next several quarters. So as I said in October, the key with Nvidia obviously is for the shares to continue to not only perform well, but maybe even potentially outperform the broader markets. They need to come towards the high-end estimate, and we'll get an indication if the company is able to do that during this week's conference call and earnings report. So the most recent quarter that they'll report on the 20th, we're expecting 33, we'll call it maybe as high as $37 billion in revenue. Anything materially higher than $35 billion will likely send the shares higher. The Q4 estimate, we need a number close to $40 billion. Anything much higher than $40 billion, well, then all of these estimates down below will get revised higher, and shares of Nvidia will likely continue to not only go up, but probably meaningfully go up. The other number that we're looking for, and we're fairly confident Nvidia is going to be able to pull up, is gross margin in the $75 billion range. The reason why we're so focused on the revenue estimates for Nvidia is the fact that this company has done an amazing job, not just from a gross margin perspective. 75% gross margins on these products is just absolutely astronomical, but the company also done a very nice job controlling their operating expenses. I want to show you something year over year. This is back in the previous quarter, and we're expecting this to carry forward into the upcoming quarter that the company announces. Last year, Nvidia had just $13.5 billion worth of revenue in Q2. Now they ballooned that to over $30 billion in revenue. That would be in the most recent quarter that the company announced. That is a solid near $16.5 billion growth on that revenue mark. Now, what's so interesting about Nvidia is look at your operating expenses. They went from $2.6 billion up to just 3.9. So yeah, I'll repeat that. You grew your revenues by over $16 billion, and your operating expenses grew just about $1.3 billion. So that is why it's so important that Nvidia comes towards the high end of these estimates, because it's able to do that. The reason why you buy shares of Nvidia is for a share of the profits. And so if the revenue is meaningfully higher, we know the gross margins are probably going to be in that 70-75% range, maybe even as high as 79-80% range. We know that's where the margins are going to come in based on the competition or the lack of competition this company has for its product. And so that means all of that revenue growth is going to flow all the way down to a gigantic net income number, and you, the shareholder, are going to benefit from those earnings flowing all the way down. So we are on earnings watch for Nvidia. It will likely drive most of the semiconductor industry either higher or lower next week. Be sure to tune into the main channel over on the investor channel, where we will have an earnings recap of Nvidia. But if it's particularly spicy from an earnings perspective, I'll give you a secondary video here on this channel as well. Now, my comment section of my videos is going to absolutely blow up tomorrow. That is because Super Micro Computer is set to open up higher on Monday. That's despite over the past 5 days, shares drifted lower by about 15%. But I'm seeing currently in the after hours, Super Micro Computer might get all that back, get back up into the $21, $22 per share mark. Now, keep in mind, shares of Super Micro are down 60% just over the past month, and they're down 80% just over the past 6 months, meaning this stock needs to get back multiple hundreds of percentage points just to get these bag holders back even. Now, the reason why it is climbing higher is the company basically is putting out a report that we already knew. The company is planning to file on Monday a, quote, plan to remain listed on the NASDAQ. This is something actually the company has already done. In fact, according to this report in Barron's, the company is basically saying nothing new. They say they're still on the search for some type of auditor that will audit not only the annual report, but once that is audited, they're able to form that 10Q. So they're still on the search for an auditor. This is not a news release that they've actually found an auditor. It's just that they're continuing to search for one. It also basically basically reinforces what we already know and what the company has already told us, and the fact that they have a special investigation, which they said was going to be finished by last week. They say that is continuing to be underway, and that it'll be, quote, completed soon, even though the company said last week in a filing that it would be already completed. And Supermicro says, as we previously disclosed, like I said, Supermicro intends to take all the necessary steps to achieve compliance with NASDAQ continued listing requirements as soon as possible. This is what is called a press release that basically says absolutely nothing. But given the short interest in the stock, and you probably have a lot of amateur short interest in this one, I would guess that is going to require some shorts to cover, as any positive news in Supermicro, given the massive downswing that the stock has been on, will likely send it higher, at least in the shorter term. The time to short this stock was back 6 months ago, when I reported a video calling this stock $150 trash. At the time, shares were, as you see on the screen, $858 per share. And that means that we've gone from 85 down to a call of 15. Now, we've gotten close enough to 15 that Supermicro shareholders have waved the white flag. What this stock does in the meantime really doesn't matter to me. My advice for the people watching the video is you wait for things to all clear, because you're not an investor. I'm going to repeat, you're not an investor if you're buying shares of Supermicro. That is because that is not a repeatable strategy. Think about what you're doing when you're buying shares of Supermicro. You're buying shares of a company that doesn't have an internal auditor to enable to audit its financial results. It's late on its most recent 2 filings, an annual report and a quarterly earnings report. So the company hasn't filed 2 consecutive earnings reports. Its previous auditor has resigned. It is having trouble finding a second auditor. It remains out of compliance with the NASDAQ. Think about your investing strategy. So what you're telling me is those are the types of companies you're going to go out and invest in. Instead of screening for stocks with large profits or high dividend yields or big share buybacks or growing revenues, no, you're going to go and screen for stocks that are out of compliance with the listing that they're on, that don't have an external auditor, and are out of compliance with stock market rules. If that's your strategy, if your strategy is to go out there and buy distressed assets, please unsubscribe from the channel. Stop watching this channel. That is not a repeatable strategy. There's nobody that I know on Wall Street that are driving Lamborghinis, that have multiple beach houses, that have expensive shoes and expensive watches, that go out and buy distressed assets like that. Instead, you focus on revenue, you focus on revenue growth, you focus on the companies that are growing revenues and doing things the right way. Until Supermicro Computer can prove that things are being done over there in a legal and ethical way, it is a stock that I continue to avoid. Now, stock that you should not avoid is Taiwan Semiconductor. Over the past year, shares have climbed 88%. Over the past 5 days, though, we saw shares slip by about 4.5%. But if you've been following along technically, this is perfectly normal. Now, the company finalized with the current presidential administration, President Joe Biden and Vice President Kamala Harris, that CHIPS Act's funding award, and Taiwan Semiconductor, in my opinion, is doing exactly what we want here in the United States. And as a taxpayer, we spend a lot of money on a lot of stupid things, but I think awarding Taiwan Semiconductor $6.6 billion in grants, giving them as much as $5 billion in loans, and then another $1 billion is well worth it. That is because TSM is going to reach into their own pocket and invest $65 billion in 3 different facilities here in Arizona. And according to my reporting, one of those facilities is already making leading edge chips for Apple in volume production, and the site isn't really going to get up to full production until early and mid next year. This is a company that has proven time and time again that they can build manufacturing facilities and build manufacturing facilities that pump out these chips in high volume. A company like Intel has proven that they can't actually do that. And so I love that this company has kind of partnered with the American taxpayer, and props to President Joe Biden and the Vice President and the Congress and the Senate that passed this CHIPS Act law. I hope that the future administration under President Trump continues not only the CHIPS Act, but continues to expand it and partner with companies like TSM that deliver for the American taxpayer and for the state of Arizona. Now, company that is going to see its manufacturing equipment appear at a lot of these facilities that TSM is building is ASML. Continues to drift lower. You want to see this technically later in the show, down about 1.4% on ASML as the company has confirmed long-term targets amid the AI chip boom. The company confirmed revenue between $46 and $63 billion. That's a pretty wide spread, but they're expecting gross margins on that revenue between 56 and 60%. That would be by the year 2030. That would imply sales growth of about 8 to 14% on average for the coming years. Now, you have to ask yourself as an investor, paying 32 times forward on this one, you already got a $260 billion valuation, maybe a little bit of a dividend yield on this one. You have to ask yourself, is 18 to 14% annual revenue growth on this one at 56 to 60% margins for the next several years, is that good enough to pay 32 times forward? You have to ask yourself that. Certainly if the market of China gets opened up, well, that would likely send this thing way higher. Now, another chip designer that uses both ASML's equipment and TSM's manufacturing prowess is Advanced Micro Devices. Shares of AMD up 14% over the past year, but over the past 5 days, shares slid by about 8%. AMD will be on watch this week when Nvidia reports their earnings, but the company plans to reduce nearly 4% of their workforce in order to target growth opportunities, but also keep the profits that this company has been able to achieve, not only over the past quarter, but also over the past 9 months. For the past 9 months, company generated about $1 billion worth of operating income and about $1 billion worth of net income. And I think this company, based on its valuation, trading at 40 times forward and a $200 billion valuation, again, printing for 9 months about $1 billion. This company is about as fully valued as it gets. And I think executives are making the wise decision over at AMD to keep those profits in place so it can maintain its valuation and its standing in the chip world. Now, we had earnings this week from Applied Materials, and it did not go well. Shares of Applied Materials started the week at 190, down over 11%, finished the week closer to $169 per share. The company announced their Q4 revenues and earnings. We saw revenue come in at about $7 billion. That was just 5% growth year over year. Now, unlike some of these other companies, you got a 17 times forward multiple on this one. Little bit of a dividend yield, probably heading higher as the shares continue to retreat, but you don't got a massive multiple on this one, so you're not expecting explosive revenue growth. But I think what had investors very disappointed was the fact that the Q1 estimates came underneath expectations. The company is guiding for net revenues at $7.15 billion. Consensus Wall Street estimate was closer to $7.25 billion. So you came well underneath expectations for Applied Materials. When we look at the company, one of the reasons why when you tick down your guidance below, even if it's just $100 million below what Wall Street was expecting, and oftentimes, as you know, these executives kind of sandbag these numbers and they give you a $7.15 billion number, maybe fully expecting to come in at $7.5 billion, but they want to give them that leeway and that breathing room so they're not put on the hot seat like a Pat Gelsinger or some of these other CEOs of these companies. One of the reasons why Wall Street's kind of disappointed is this is a relatively low growth business already on the revenue side, and it's relatively mature on the operating expense side. So what you see here over the last year is you went from $6.7 billion in revenue up to about $7 billion, but you flew all the way down to net income and you actually saw a decline there from $2 billion down to $1.7 billion. Now, some of that has to do with the fact that the company had to pay some interest or not realize some other income versus last year. Interest expense ticked up over the past year, but also operating expenses ticked up as well. So when you have relatively slow year-over-year revenue growth, those even somewhat slow operating expense growth of about $100 million, chews up a decent percent of that revenue growth. All things considered, company looks pretty good from an operating standpoint. Balance sheet looked perfectly fine. Also cash flows. The company continues to buy back stock. From a cash flow perspective, in the most recent quarter, about $101.4 billion worth of stock. So you're getting that buyback, you're getting a little bit of a dividend, and you get a little bit of tailwind. If that China market can open up, that is a big wild card, and I'm certainly not going to predict it or anticipate it. But the former president, soon to be future president of Donald Trump, is much more of a wild card when it comes to China. Instead of he has a hard line on him, but he proved in his first administration that he's willing to come to the deal. He's a very transactional president. If China gives him one thing, he's willing to give back another thing. Whereas the current administration under President Joe Biden was a little less transactional and really just more about putting sanctions and pressure on China without really getting much different in return. We'll see how those things progress. I'm not arguing for one thing or the other. Us as investors kind of have to sit back and see what happens. Now, an under the radar company that you may not be aware of also reported earnings this week, and that is Camtek. Camtek makes testing equipment for the high bandwidth memory and also other logic chips inside of the semiconductor industry. As most of you know, when you manufacture these semiconductors, they have to be tested because you sure as heck wouldn't want to put these devices, certainly in large volumes, inside of either automobiles or a cell phone or certainly a data center and then find out it's defective or it's not working. So each one of these computer chips and these wafers actually has to be tested as it comes off the manufacturing line. One company that makes test equipment is Camtek. Now, if you followed me over at my previous employer, Brownstone Research, we actually recommended this stock. I think it was late 2023. I think it was in the $50 per share range. I don't remember off the top of my head, but in less than a year, you had more than a double on this one. This thing went from 50 to 130. That is why very soon I will be having a wealth management product that will cost something, but I get a lot of requests. Hey, I want to know what picks, what stocks you're looking at based on some of the calls that we've had in the past. Super Micro going from 850 down to 20 or 85 down to 20, but also Camtek. There were also 4 or 5 other stocks that we recommended. I was just at Brownstone Research for a year, and I think we had over 4 stocks go up 100% in less than a year. And so I have people knocking down my door asking for more stock picks because a lot of them made tens of thousands of dollars, and in some cases I know over 6 figures. And so those products will come. Camtek, though, obviously has kind of given back some of those gains. If you play for a product of mine, we would have sold this one. We have stop losses and we continue to move them up on these products. So you would have realized some gains here. But currently shares are trading at $74 per share, trading at 26 times on this one. You also have a little bit of a dividend yield. This company is still experiencing a rather explosive growth from the revenue side. Just over the past quarter, they went from $80 million worth of revenue up to $112 million. Keep in mind, this is not a mega cap company. Even though shares are at $74, you've got about a $3.4 billion valuation on this one. For the year ended, the company put up about $315 million worth of revenue. Flow down to operating profit, and you see this is why we were attracted to this company. Is a year ago they were generating revenues, but we knew they were going to explode from $19 million up to $29 million over the past 3 months. Look at your 9-month from $48 million up to about $77 million. So this is one of these small cap companies that are in a very nice trend, data center, AI, high bandwidth memory, and they're very, very profitable. You've got very solid management over at this company. They maintain very nice gross margins. From a balance sheet perspective, there's not a lot to worry about. This company has plenty of cash on the balance sheet. Looks like to me they have plenty of inventory to meet future demand as well. You do have some long-term liabilities, including a rather large convertible note sitting here, but again, you have plenty of cash sitting on the balance sheet. Now, technically, Camtek is sitting on a bed of support. So if you do want to step in here, there is an opportunity, but you got to set your trade up right, because when you sit on these beds of support, there is a potential that you come down and you retest the other areas of support, which are much lower. So with Camtek, if I were to step in here here and buy this one, you might get an opportunity on Monday or sometime next week to step in on this one. Would you want to step in before Nvidia's earnings? I'll let that up to you, but you gotta have a stop loss on this one. I'm not saying this to cover my own ass. I'm saying this is how professional traders and professional investors set these things up. I would want a stop loss on this one just below the tick that we made back here in September. I'd probably put a stop loss right here at maybe $69 per share. So I'm risking $5 to the downside, probably to come back up here and retest an area up at 90. So you've got a $15, $16 to the upside, $5 to the downside. It's about a 3-to-1 risk reward. It's about the minimum that you want to see when you set these types of things up. I think based on the earnings from Camtek, I also think Nvidia's earnings and their growth is going to continue. I also think Camtek could be a buyout target for some other semiconductor company that's looking for revenue growth, looking for a strong company to acquire at just $3.4 billion valuation. I could see a company putting a bid on this one, $4 to $5 to $6 billion, and you could recognize some upside there. It also could create an artificial floor underneath the shares. Now, I'm in the SOXX, guys. We broke trend. Yes, we did. Now, I do want to point some things out with the SOXX, and I think I pointed this out on last week's show. We've got multiple trends with this one. We've got this purple trend, which is the long-term trend. So if the SOX comes all the way back to that trend, I'm not overly concerned. In fact, I would be backing up the truck at that moment. We've been more on this breakneck trend with this one. Now, more recently, though, we've kind of tested the bottom of the channel. These bottom of the channels where I like to go. Now, yes, we did break through. We are heading into Nvidia's earnings. Like all trade setups, I have a stop loss down here at 204. So I'm risking 7. I'm probably in this one a little bit higher. So I'm risking about $9 to $12 to the downside. But I'm assuming that we could continue trend here, retest the middle of the channel. That would be back up at 268 or so, even call it 270. So you've got $50, $60 to the upside, with a $10 to $12 downside. Again, another kind of 4 to 5 risk to reward on this one, and that is what we're looking for. The SMH doesn't know where to go. It's consolidating sideways heading into Nvidia earnings. Obviously, this one's slightly more concentrated in Nvidia. If you have a great print from Nvidia this week, this will probably retest up here, maybe close to 280. Further pullbacks in this one, we will be looking to buy. Now, Nvidia is actually setting up in a place where you could get a nice pop. This one's just been kind of channeling higher, and you report that earnings and really that guidance, you could very comfortably come up here to the 170s. Even higher, all the way to the top of the channel, would take you probably darn near close into the $200 range. Very much like the SOXX ETF. One thing you have to keep in mind with Nvidia is it's way overextended what we would consider a longer term trend. Now, obviously the fundamentals line up with this type of just breakneck 90-degree hockey stick type of chart, and it'll be up to the company to continue to deliver the type of results that are required to keep this hockey stick basically upright. But a break in trend this week from Nvidia is not the end of the world. If you get a break in trend, we'll rejigger some trend lines. There's probably one here as well, which we'll start to look at. AMD had a rough week, and here you are sitting right on a edge of support. We'll change this back to a daily view so you can see it a little bit easier. In fact, we've broken through this purple trend line, which really dates back all the way back to 2015. So we're setting up in a really interesting level with the semiconductor industry. In fact, we're seeing some actual breaks of trend. These are some areas, if you're a conservative investor and you don't like to see your Robinhood account tick down at all, these are the areas where you just kind of sit back and you wait to see if the trend is going to resume. If it resumes upward, then you step in on these stocks. But these are actually areas where I don't mind. I have put on many losing trades. I have sold stocks many times at a loss. Now, at the same time, I have sold many stocks in the past. And in fact, I've bought 2 separate houses, which I still own today, by selling stocks. So my upside certainly has been higher than the downside. But if you like these types of areas, these are areas where you can step in and buy. Just make sure you have stop losses, because if these trends break, it tends to really want to break. AVGO, which is Broadcom, they don't report their earnings for a while, not until December. So we're still about a month away on this one. This one's setting at the bottom of a purple trend line, which again is kind of more of an intermediate trend line. This has been intact since October of 2022. So you've got a near 2-year trend line that is held. Now here we are retesting it. Again, another area where if you like this one, you can step in. But again, the semiconductor industry is going to be on pins and needles until Nvidia reports their earnings. Now, Intel still looking actually particularly good from a technical perspective. Now, that is in the shorter term, because longer term, it's still really creating a steep series of lower highs, lower lows. But we are closing this gap. We should meet resistance in this area. You still probably got another $3, $4, or $5 to the upside on Intel until you hit some hard resistance. Now, Qualcomm hovering above the middle of the channel. You're waiting for a break lower on Qualcomm. Taiwan Semiconductor, like I noted, just confirmed a new higher high. When you confirm new higher highs, tends to bring in some sellers. You're looking for further pullbacks in TSM, probably down to the 160 area. ASML appears to have found some demand for shares in this area. If you like this one, this can be an area where you buy. Just keep in mind, you got a pretty high valuation based on the projected growth rate. But if you're more bullish on China, if you're more bullish on the read-through into the Trump administration, on their dealings with China as it relates to high-end semiconductors, well, this is a stock that would skyrocket on any of those types of news. We're very close to the bottom of the channel. When you get close to the bottom of the channel, and in the case of ASML, you're $50 basically between the bottom of the channel and here. And $50 sounds like a lot, but it's a $658 stock. So it's actually, from a percentage basis, it's less than 10%. This is where you start positions. You want 10 shares, you buy 2 or 3 here, continue to pull back. You dollar cost average into this one even further. NXP, we saw last week, dropped on its earnings, but has found footing at this long-term trend line. You've got a long-term trend line with this one dating back, I mean, a really long ways. NXP, you can straight up buy that one from a technical perspective. ARM Holdings, ooh, wow. We've actually got a really solid break of trend, at least from kind of a micro trend with this one. Also, it kind of confirmed a few things. We thought maybe we could be making a series of higher highs, but no, that actually doesn't look like that has been confirmed with ARM. In fact, you have a low or a high and then a lower high here. Now, it hasn't been confirmed by a series of lower lows, so you're making one of these pennant or flagging formations with this one. Should be some support with ARM right here at about 120, 121. So this is an area, if you do like ARM Holdings, actually could be an area where you nibble just kind of fractionally. Now, back to the falling chainsaw. We are seeing in the after hours, I don't have it up here, but if we zip back over here, maybe hit the refresh button, we're seeing in the after hours, super micros at 21. Now, who knows what this one trades at next tomorrow? Now, understand there is short covering in this one, so there's a little bit of that, but you're still at the bottom of a steep downward falling knife channel. This is not an area where I would advise investors, especially not disciplined investors, to buy this one. Although if you're a little bit more sophisticated from a trader perspective and you can actually sell a stock, these can be areas where you're playing the bottom of a channel bounce back to the middle to sell there. Wouldn't recommend it. Not a trade I would set up. This one's super volatile. In my opinion, there's too much fundamental stuff that makes that a no touch. DELL looks great. DELL reports their earnings on Tuesday, November 26th. So we'll get them less than a week from now, or a little over a week from now, excuse me. You're looking for DELL to continue to churn higher, bullish notes. Even a mention on the Nvidia conference call could be bullish for that one. Micron will swing on Nvidia earnings as well. This one still looks good. It's in the middle of a channel. Actually, what's interesting, I'm doing some research for something else over here, is President Trump was elected at the tail end of November of 2016. Now, he wasn't inaugurated until January of the following year, but this is actually one of the best performing stocks up until COVID, okay? Now, even after COVID, this one went up even more, but here gives you kind of an indication of Micron in the first 2 years pre-COVID of President Trump's term. And actually the House and Congress, Senate was all aligned almost identically to where it is now. Micron went up over 220% under the Trump administration. One thing about Micron is they actually manufacture a lot of their stuff here in the United States. They have manufacturing facilities across the world, but they actually are a big United States manufacturer. And so this company could benefit from some of the tax policy, trade policy, lack of having to realize some of the tariffs potentially with Trump. And just, again, past performance doesn't equal future results, but Micron went up over 200%. In fact, if you factor in the entire Trump administration, it went up like nearly 400%. LRCX, otherwise known as Lammer Research, continuing to hold a position here in the middle of the channel. Again, these are areas, if you want 10 shares, you might buy 1 share here, 2 shares at most. Continued pullbacks, you dollar cost average. And then finally, Applied Materials broke through the middle of the channel. We're working our way down to the bottom of the channel. These are areas where you get more aggressive. That is because this long-term trend with Applied Materials has held since 2015. So you got a near 10-year channel. And so as you pull back on this one, I think as you get into the 150s on this one becomes really, really attractive. Again, relatively low growth as you saw on today's show, but you got a little bit of a dividend yield. You got buyback. So that valuation becomes more and more attractive the more Applied Materials pullbacks. Folks, that was the Semiconductor Show for Sunday, November 17th. I hope you enjoyed today's video. Be sure to join us next week. If you haven't subscribed to the channel, be sure to do that. Leave me a comment down below, like the video, and be sure to tune in next week as we cover the earnings from none other than Nvidia. Hopefully you enjoyed today's video. We'll see you again soon. Good luck with your investments.